following presentation is for educational purposes only. All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader LLC. Trading futures involve substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.
All right, let's talk futures. Joining me live from Dublin, Ireland, Créde Sheehy-Kelly. Créde, how are you?
Hi, Jim. I'm great. Thanks. Great to be back again.
Thanks for being here with us. Now, just for those of you who don't know, I haven't been to an event here with me and Créde. She is a high-performance psychologist in Ireland, but focuses on traders, does a lot of work internationally, and has some incredibly great insights about the psychology of trading, which we know is probably one of the most important things we have to deal with. So thank you for coming on the show.
Not at all. It's a pleasure. My pleasure to be here.
Yeah. So I know we were going to talk about trading on tilt and some of the other things that a lot of us do all the time, but I did want to introduce there's a series of famous books written by Mark Douglas, and one of them is called The Disciplined Trader. And in his book, I was rereading his book this weekend, and I was thinking the whole time, I'm like, did Créde write this book? I mean, all his points are exactly what you've been talking about. It's incredible. And I'll give you some quotes, which really struck home with me. And I want to give you the quote and get your opinion on it. I'll just quote him. Release yourself from any feelings of inadequacy, guilt, or shame.
Yes, that in a nutshell is the key to performance psychology, to trading psychology. Like for me, we've talked a lot about the subconscious influence on the actions you take when you're trading. And at the basis of those, it usually boils down to a few key emotions and a few key limiting programs that are linked with self-worth, shame, a sense of lack. So I think he's nailed it there for sure.
Right. And then, so you don't really get that. You don't really understand that until you trade it, right? In with respect to the trading world, right? So if you're brand new to trading, you don't know you don't really get it. But once you do trade, then you start getting it because you have these feelings that pop out.
Absolutely. And this actually came up in a question in my course the other day. So there was a trader who was newer, who'd gone through sim and was building up confidence, trading really well. And then they were asking, like, why is it that suddenly when I go live, my confidence drops? I'm not performing well. Like, what's happening? And it is exactly what you're talking about. It's all fine when you're learning the technical piece. And then suddenly when the pressure increases and you're trading live, that's when all of these psychological issues will come to the fore. And the market, you can't hide from the market. It's such a tough taskmaster. So it's likely when someone starts experiencing these challenges in their trading, it's actually likely that those themes are present for them at a personal level across the board in all areas of their life. What happens is that you get away with not being faced with them fully. They're probably impacting you. But as soon as you go into an arena like the market or high performance sport, there's nowhere to hide from it. It's so pressured and the margins are so small that that's when you'll see it. And that gives people then a motivation to actually overcome it. But then the flip side of that is if you work on overcoming that, because of your trading psychology, it also benefits other areas of your life then.
Yeah, no, I mean, I remember early in my career, right? And I'm trading. I'm like, you know what? If I could make an extra $2,000 this month, I'm going to buy, XYZ, whatever thing I was fancying at the time. That's not a good strategy.
It's not a bad strategy. I mean, we have to be realistic. So everyone is trading because they want to make money, and that's the truth of it. What people want to do with that money is different. People have different ideas of how they want their life to be or what things they want to buy, etc. It is an outcome focus. So, but even the fact that you're saying that on a month basis is not so bad. If you were saying that on a daily basis, that's where people trip up. So it's not that outcome goals, like having a profit goal for a month or for a year, is a bad thing. We want them. They're the measure of performance, but we want to kind of set them and then park them and then focus on the execution of our plan. So I would say that having that goal and, you know, knowing what you want to buy with the money is fine. It's motivation. It's why you're trading in the first place. But as long as you can park it and then switch your focus to a process focus when you need to, then it's not detrimental to you.
Okay, so I like that. So that goes to, going back to Mark Douglas, release yourself from the notion that each trade has the potential to fulfill all your dreams.
Yes.
That's that $2,000 a day thing, right? That's like, I'm going to make 2,000 today because I need to buy, you know, a new fish for my fish tank or whatever.
Exactly. I think that's a place where people trip up a lot. And even in entrepreneurship, it's the same, where people put such expectations, like they place such an emphasis on every trade or, you know, entrepreneurship, every sale, every day of revenue, that they're actually constricting what is possible. It's not realistic to expect the market to be delivering like that for you every single day. So you're asking too much. And when you have those unrealistic expectations, it heaps on the pressure. And then pressure is what creates or exacerbates any issues on a psychological level. So yeah, it's when you put so much store on every single trade, either in terms of the P&L and making money or in terms of your self-worth. So I'm a great trader if I make this trade, if I make money on it, and then if I lose it, oh, that's showing me that I'm a terrible trader. I'm never going to make it. I'm never going to be able to quit my 9 to 5. Like, people actually generalize massively based on the performance of one trade. And that's where you start tripping yourself up. So it really is. And I'm sure as I told you, I haven't read that book, even though I'm fully aware of all of his books, but I'm sure that he talks about this, of being detached and being able to kind of sit back and not get so emotionally involved in every trade. I'm guessing that he covers that. And that's what we'd be talking about here. It's that ability to stay a little bit detached, do your best to perform well on every trade, but not get so invested in the outcome of every single one.
Yeah. And so, all right. So we have someone in the in the chat. You know, we're streaming a couple chats live right now. And Jen Junie says, "Hey, I had a good trade this morning. Should I continue or should I stop for the day?"
Oh, that's a good question. So I would say continue, but depending on your rules. So sometimes people, they think about the rules in terms of, you know, where to enter a trade, where to exit a trade, but they don't think about the wider boundaries that they place on their own trading. So to give you an example of some of the rules that I'm talking about, it could be limiting yourself to 4 trades a day. It could be limiting the time frame in which you are trading. So there's a 2-hour window and then you cut it off. So the question of, I had a good trade, should I stop? Not necessarily, if it's not part of your wider rules of how you trade, like the boundaries within which you trade. And definitely we're looking for optimizing performance. So we're not trying to cut people off or stop them from capitalizing on a good day. It's whether you have the mental resilience to be able to keep trading and keep focusing on the execution of your plan and not get caught up in the fact that you're ahead or you're behind. If you have that capacity, then continuing on within the boundaries of your trading day is perfectly fine. It's more like kind of in the moment solution. If you're struggling with trading psychology, where you have a good trade and then you say, okay, if I get to, let's just pull out a number, $600 in a day, then I stop trading for the day and I just bank that and I wait for the next day. Maybe you would have a rule like that if you were actively working on your psychology at the moment. So there would have to be a very strategic reason for doing that. Otherwise, you're kind of chopping yourself off from capitalizing on what's available in the market.
Yeah. And thinking about the definition of greed, right? All right. I'm on a roll. I had a great trade. I'm invincible. You know, I want to make more money quickly. Greed is one of these things, I think, and correct me if I'm wrong, where there's no limit to it. There's no measure to it. You always want more and more and more, and that could be a deadly sin here.
Yeah. So again, it depends on what you're psychological makeup is, what you're struggling with or not struggling with. But in terms of greed, it comes from a sense of lack. So sometimes people focus on the greed and the wanting to accumulate loads, but actually it's stemming from a root emotion of lack, scarcity. And because that's an emotion or a subconscious belief, it's not something that can ever be resolved unless you actually target the subconscious belief and change it at that level. So, and, you know, we're talking about revenge trading, trading on tilt. Absolutely, that sense of lack and that which manifests as greed can be a big driver for people just pushing. So I would say that, yeah, if you're feeling in a state where you feel like I'm just going to push this to the limit and I'm going to keep driving forward, you're probably not in the best emotional, mental state for trading that day. So this is why it's so important to have these boundaries around not just the rules around how you trade, but also around like when you trade and when you stop. Because what we want to do at all times in trading psychology is to remove any subjective in the moment decision making, or as much as possible. Because when there's bandwidth for you to just decide, oh, I'm on a roll, let me keep pushing it, and that's not checked against any rules, then that's emotion-based trading. Even if you're up and you're feeling good, it's still emotion-based trading, and it can as easily just flip back the other way. So we're trying to create as many boundaries and rules as possible so that it's all logical and it's not driven by emotion.
Yeah. Now get into that trading on tilt. Now you may have coined that. I've never heard that before. When you're just like, hey Jim, let's talk about trading on tilt. What is define that for us?
Oh, that's so interesting. I actually I've only picked that up from traders. Like so, I think a lot of people would describe it like that. I don't know, maybe it comes from poker or something, but it's when you're in that mindset of just the consequences have gone out the window. You've completely detached from them, and you are just, you know, going to keep trading no matter what. It's usually linked with emotions like rage, frustration, resentment, anger, when you've taken a few losses. So the most common time where people start revenge trading or trading on tilt is when they've had some losses and it's put them in this negative emotional state. And then the mindset is, well, I'm going to avoid ending the day red at all costs. So I'm just going to keep trading and keep pressing the button and keep putting on trades to dig myself out of this hole. And, you know, it never really works. Or actually the problem is that sometimes it does work for one day, but if you look at that, you zoom out and you look at that over a longer time period, it always ends up with people losing money. So it's a habit that can reinforce itself, but it's a really detrimental habit to have.
Yeah. And all right, so I'm going to use the word psychological in a general sense. You get in that, and I'm a victim of it, right? I've gotten in that mode, and you know, part of it's my ego saying, "Oh, I'm going to get this back. I'm going to get this back." You know, I'm right. The market's wrong. You know, all the things that, you know, we shouldn't do, right? The market's never wrong, right? It is what it is. But you know, you get in that zone, the bad zone, and it's hard to pull out.
Yeah, it's really hard to pull out, because it's actually, if we look at why it happens, people, there's a few kind of common reasons or factors that combine together to create this in people. So one is the pressure, which obviously there's a level of pressure inherent in the market, but if you've taken 3 losses in a row, you're going to feel significantly under more pressure. So the pressure kicks in, and then one of the key reasons why people are even able to go on tilt is that they have a numbing coping mechanism for stress. So just to explain this in the trading sense, it would be where, you know, you're losing thousands maybe, and you keep going. So logically you would say, if I'm losing thousands, that's really painful. It would be painful enough to get me to stop and draw a halt. But if you have a numbing coping mechanism to deal with stress, and this comes from childhood usually, and we use it in lots of areas of our life, so it's not an uncommon coping mechanism, it means that you kind of dissociate from what's happening, from the current moment and the consequences of your actions. And that allows you to just, in a very numb state, keep on trading, keep losing thousands, and you know, you don't stop until suddenly the day is finished. And then you're looking at it and saying, what happened? It's like someone else took over my trading. So the pressure, if you're a person that uses that coping mechanism, and then if you have any kind of subconscious limiting beliefs or projecting self-worth onto the market, that exacerbates it as well onto your trading results. So there's a few factors that combine together to create this state in people. But one of the most common characteristics across all of the traders that I've worked with, specifically with this issue, has been that tendency to dissociate or numb out when they're under stress. So it's something to watch out for.
Yeah, no, that totally makes, you're not possessed, right? You have the you have the keys to your own release. And the next day you're like, why did I do that? And now you're guilty about it.
Exactly. And it's like, again, it's like an emotional hangover. So if we just pull it out of trading and look at life, let's say someone's under massive stress and they go binge drinking for a weekend. It's the same idea. It's like you're trying to relieve the pressure with a short term, in the moment, something that makes you feel better. And that's at the expense of the long-term consequences, or, it's going to lead to long-term consequences. But in the moment, you're choosing the short-term benefits over the long-term consequences. It could be somebody, eating sugar because they're stressed and it makes them feel good in the moment, doesn't deal with the stress, and then they're annoyed at themselves after. So it can be in very small ways that people engage in this. It's not just isolated to trading, but obviously if you do it when you're trading, there's a ton at stake. You really could lose thousands. And I work with traders who lose thousands on a daily basis because of this issue.
That's a personal point with me. Sugar is my kryptonite.
Yeah.
And I could go months and months without it. No, no ice cream, nothing like that. And then all of a sudden I'll have these moments where the floodgates open up, right? So the barriers, the dam collapses on me. And that's kind of a good analogy for some of these problems we experience with trading.
Yeah. And again, it's pressure. So even if you're really highly disciplined most of the time, say if it's around sugar, you could swap in or out trading sugar, alcohol, people use lots of different things, but it's all the same kind of mindset. So you are keeping yourself under a certain level of pressure and you're withstanding that pressure, and over time, and then something breaks and you're just like, I want to get rid of this pressure as quickly as possible. And that's when you'd end up eating the sugar. Or for the trader, they're fine with the first loss. The second loss, they're getting agitated. The third loss, the pressure has just increased to a level that they can't withstand it. And then they go, screw it. I'm just going to, I'm going to earn this money back. I'm just going to keep trading. And in the moment, that feels good because there's the hope that they can make it back. So while they're placing the trades, they're getting that dopamine hit. The hope of turning it around is still there. And that's kind of like a balm to that pressure. But unfortunately, it's because they're numb from the consequences of what they're doing. Inevitably that ends, and then you have to face the consequences, and that's when it's really painful. So it is actually one of the most common challenges that I've seen traders facing. It's one of the most searched terms, revenge trading at least, on YouTube and that. So I know that there's a lot of people struggling with this to different degrees, but it's a really common challenge.
So but revenge trading, the term suggests that, hey, the market did me wrong. I was right. The market did me wrong. I want to get revenge on the market. I'm going to turn this around and change my P&L. Is that part of the thought process?
Yeah. So actually, just to be a little bit more clear on it, they often go hand in hand. So the revenge trading is exactly that. There's a sense of frustration, anger at the market, but usually it's anger at yourself, but you're projecting it onto the market, sense of being hard done by. So all of those emotions that combined with that pressure trigger this dissociation, this sense of separation. And then that leads you to start taking all the trades. So the going on tilt is nearly like the second part. The first part is this mind frame of revenge trading, and I'm going to get this back. And then the action is going on tilt, where you're taking all of the trades and you're just not stopping, like you're going way past your daily loss limit. So it's nearly like one comes first, then the other happens. So yeah, sorry, gone totally off topic, but that's clear.
Yeah, no, I get it. And so in many trading platforms, there's a reverse button, right? So if, let's say, you're long a position and you change your mind, you're like, oh no, the market's going the other way, and you click on that reverse button to go short, just outside of your plan, right? So when you're doing that, you're your plan is out the window. The reverse button is the worst thing in the world. Nobody should ever use the reverse button unless it's part of their plan ahead of time, but it's there on a lot of platforms, right? So it's got to be a part of your plan ahead of time. Otherwise, you're just reacting to price at the moment, and you haven't let yourself release yourself from your longer term objectives.
Exactly. It's emotion-based trading. So the emotion is strong and therefore you're just taking action based on that. Whereas if you could completely calm down your emotions and be very cool and composed, you would know that that wasn't part of your plan. And so you wouldn't take the action. So there's two kind of key ways at the root to address this. One is to reduce the amount of pressure that you're under. So you're not going to reduce the pressure of being 3 trades down objectively, but what you can do is reduce how you are feeling, like the level of pressure that you feel under in the moment. And if you can pull that down to a manageable level, then the likelihood of tipping into that going on tilt is less. So for quick examples of what you could do around that would be things like breathing exercises, progressive muscle relaxation, which is like a quick in the moment way of de-stressing your mind and your body, where you tense your muscles and then you forcibly release them while you're breathing in and out. It's a whole sequence of things, but it can be done quickly. So the idea is that you're actually working on yourself to pull down your pressure levels, and that allows you then to start taking control of your mindset again and taking control of your actions. The other thing to do is to work on this tendency for dissociation. So there's really simple, practical things that you can do to keep yourself anchored in your body and present with the market and the consequences of your actions in the moment. And that's something that you have to practice over time. It doesn't change overnight. But if you start using those techniques to keep your awareness and your sense of being anchored in your body really strong, that can also counteract the tendency to go on tilt as well.
Yeah. And one of the tricks I use, I don't know, and I'm going to ask you how you feel about this. I have a notebook and a pencil, and I write down what I'm doing, right? Before I do it, I write it down. When I get my fill, I write it down. And then whatever happens, I'll put a couple of notes in there of why it met my expectations or why it didn't. And by making that physical detachment from the mouse and the keyboard to a pencil and paper, that helps me.
Yeah, that's actually one of the techniques that I would definitely suggest. So you're already doing it. What you're trying to do is disrupt that automatic process. So angry emotion or resentment or whatever you're feeling, and then just automatically placing the trades. If you can interject in the middle of that and regain control of your conscious mind, like pause it, so just break that automatic chain, then it allows you to actually take control again. So what you're suggesting of journaling is a great way to do that. So even other suggestions of things you could write down to help with this challenge would be naming the emotions that you're feeling. So there's actually research to show that if you just name the emotion that you're feeling, it actually reduces the charge of the emotion. So let's say that you're feeling really angry because you've lost 2 trades in a row and you're blaming the market. If you literally write down, I'm feeling angry, that is a way to start taking control of your emotions again. Then maybe even reflecting, like you say, journaling after each trade. And it would be important to journal after a winning trade and a losing trade. So you don't really distinguish. It's just a practice that you do it. And so you're saying, did the trade do what I expected it to do? Did I follow my plan? And if I didn't follow my plan, what was the way that I broke my rules? And what was the predominant emotion that I felt throughout that trade? And one, it does exactly what you're saying. It disrupts that. It keeps you anchored and centered, and it kind of keeps you in control of your trading. But then 2, you actually get a ton of data that you can analyze over time to see patterns. So you might know that every time you feel bored, maybe that you tend to break your trading rules, but you see that because you see it in the data that it's a pattern, and you've collected that data over every single trade for a month. And then you can start to see, okay, I know that if I feel this specific emotion, that's a red flag to me that I'm likely to break my rules in this specific way. So it actually gives you information to use to help you to overcome the challenge.
Yeah. And for me, I don't know if this is true for all human beings or not, but when you write something down with a pen or pencil, I feel like your brain processes that information differently, and you could remember it longer than if you just dictate or type or, do it something else.
It's a little bit more active. So I would agree with you on that. I'm actually not sure of the science behind that, but for me, that's true as well. Like if I write something down, I tend to remember it better. You're engaging more of you're engaging your motor skills as well as your brain. So you're kind of using more parts of yourself to encode it.
Yeah.
So I think that when we're talking about trying to stay present and instead of detaching and numbing out, then that makes sense that writing it down rather than even typing it. Obviously, typing is probably, you're still using your fingers or whatever. But I think it takes that little bit more of proactivity to write it down. So I think they're excellent in the moment techniques that you could use to really help with this challenge.
Yeah. I mean, as an example, if my wife says, don't forget to fill in the blank, I'm writing that one down.
Wise, very wise.
I write that one down. Anyway, we have a lot of kind comments here in the chat. I appreciate that. Mav Trader says, I believe trading on tilt comes from the days of the pinball machines and causes a tilt by shaking the machine until it shuts down. I like that analogy.
That's really interesting. I never knew the root of it. That's super interesting.
Yeah. There used to be pinball machines before we had video games. So you might be too young
to remember them.
Anyway, let me pivot. Let's share your website here because you got some good stuff on here, and I want to make sure people know how to find you. The website is called Créde Performance. Now, I'm not from Dublin, so I had to learn how to say Créde. There's an E in there, but that's the website right there.
Yep, that's it.
And then you have this register now thing. What is this free trading psychology masterclass? What happens when I click on that?
So this is actually a free masterclass that's kind of on demand, and it goes in depth into 3 of the main challenges that traders face, and it gives you practical strategies to deal with it. So it's like an in-depth training, and there's also 2 resources that go with it that actually will help you to apply that training in your own trading. So rather than just talking at you, you actually, learn something and do some exercises to cement that and integrate it into your trading. So that's free and available at all times.
Okay. Awesome. And I cut and paste that into the chat. So everybody can see a look at it. So, and I lost all of my screens when I did that. So here, bear with me one more second here, because I know Alex Cole's coming up next. Hang tight, everybody. We're going to get there as soon as I get my little window up here. Nope, not going to be able to find it. That's okay. But let me just end with this. I appreciate your time with us today. It's been awesome, and I'm looking forward to having you back. And thanks for all your great intel.
Thanks, Jim. Lovely chatting to you, and talk to you guys soon.
All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader LLC. Trading futures involve substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.